Good morning, folks. I'll be right back. Alrighty, we're back. Hello, hello. Let's see. We'll get started here in just a few moments. I know I'm on a little earlier than I'm supposed to normally be, but I had to. Because the SPY, there's a strong chance that, let me just double check. I want to give us, there's some good action going on this morning, so. Let's see, it looks like the market is targeting, at least on the SPY, to, we'll see, it's debatable, but there are reasons for the SPY to maybe drop out to 683.26 as far as 682.74. Let's double check some of this stuff. Interesting. That one's complete. We'll see. All right, cool. Yeah, I just want to finish updating our thumbnail, and then I'll get rocking and rolling. So just give me a second. What? No, I want that one. Sorry, yeah, we'll get started in just a second here. I gotta finish doing something. Where is this at? I don't understand. There it is. All right. Change. Sweet. There we go. All right. All set. All done. Yeah, market could very well be targeting some 50% retrace stuff. So I'll bring that up in just a sec. That would be a big drop this morning, but we'll see. 2%. Good morning. Good morning. 1 second. Sorry. All right, we're getting into our mojo here. All right, we'll bring it up. Cool, like that. Bing, bang, boom. Let's bring up the SPY here. So this is arguably on deck. It may not be today, but we are kind of moving in that direction. So taking a look at yesterday's action here. Again, you see this big wick, this big candle on the market. Let's zoom in right about there. It's actually a little off. I'm actually going to update this one just a bit. Oops, excuse me. So essentially that is an algorithm candle that took place yesterday. They happen all the time, but ultimately, running a Fibonacci on it can be very beneficial. So ultimately, market could very well be targeting down into the 50% retrace level, just anywhere into that golden pocket, 50% retrace. That's a very common thing we'll see from time to time. So whenever you see one of those big algo candles or algorithm candles in the market, always take note of it. And anyways, so that could very well be one of the destinations for the day. That being said, the market is still long bias in the sense that we are positive on the 30-minute. So I'm going to go ahead and move that up and go to a new one. Yeah, so different platforms, they give data differently. So that's why, like, I always look at I look at TradingView and we look at Thinkorswim. Platforms, not really sure why, but they display data differently from platform to platform, so who knows why exactly, but those candles can be found on Thinkorswim, not TradingView. TradingView does not do, doesn't show them, so don't know why. Who knows why, but anyways. So there's that. Right now, SPY is on the pre-market 30-minute, so pre-market 30-minute uptrend still intact, whatever. All in all, the market is still trend positive. We're well over the 50 SMA. One could argue that we've had a really strong long bias move. Call it extended, if you will. Maybe it needs time to relax, yada, yada, yada. So, I mean, really at the end of the day, we're just still looking for pullbacks to higher lows at the end of the day. It's really the name of the game right now, is looking for pullbacks to higher lows on the market, and hopefully for the trend of the market to remain positive all throughout the rest of the week / into next week, and the market remains in an uptrend. So yeah, hopefully that makes sense. A couple things that we might be able to see on the intraday for now. Like we said before, or let me bring that up. And, you know, before we keep kind of going into all the craziness, just remember the SMA system is positive, so ultimately the trend is positive, okay? So, you know what? Let me write that on the screen first, you know. I know that there's always so many different rules and strategies we use. You know, I just try to keep everyone as informed as possible. So, let's just make sure we add this here. What time is it? 8:48. No worries. Bullish above. And it is bearish below. All right, so that's how we read the market. So as long as the market is, and so that's another funny thing is when you see me set that up like that, bullish above, bearish below, so on, that literally means the entire market could sell all the way down here and still be bullish. All right, so just keep that in mind. You have to understand where the true, well, not the true, but just understand where the trends are at. So still bullish on the market overall, because obviously the market is trend positive. We might be a little extended, if you will, needing some pullbacks, if you will, but ultimately trend is still positive. Yeah. One sec. That is down to 68274, so 68225, 682. All right, 683, 275, 683, 25, 26, 682, 23. Yeah, so essentially, and then there's one level in between. So right now, these would be our downside destination levels, some of which, right, based off of some Fibonacci stuff, right? So real quick, what we're going to do is we're going to take a volume weighted average price. We're going to add it to the top of the market today. So we should be set up kind of like this, because we've also had a pretty good trend to the downside in the pre-market trading session. So therefore, there's been a lot of bearish trading, if you will. So this is going to be our pre-market downtrending counter trend target / resistance check, lower high-ish magoo. You know, so yeah, that's pretty much that. Hope that makes sense. Which really just means this, right? That the market, if it wanted, could bounce all the way back to here and then still see resistance, right? So the way that I would read the market based off the current pre-market trading activity, so if we look at today's pre-market session as its own trading environment and its own set of volume, regardless of, you know, previous day session or whatever, That's how I would read that, right? Is that this is our pre-market volume bearish trend level slash control point, and the market is magneted to it, and so we would read it like this. That's how I'd read that. Meaning the market, if it want, again, because remember, the market's not bearish, right? It might be seeing a bearish move, but the market is truly bearish below here, right? So in theory, it can sell all the way down to here before I or this stream would consider it bearish, right? So apply that somewhat of the same logic, to today's pre-market session, which is you have the volume weighted average price coming down from the pre-market high, and everyone that's been betting bearish in the pre-market, their average share price is somewhere up there, right? So a lot of times when we find support, we could arguably take it back to that volume weighted average price area. So nonetheless, basically the two green boxes you see on the screen are the two areas of interest that we are looking for the markets to essentially trade to. You know what I mean? So right now you could say you're extended from the one on the upside, haven't quite hit the one on the downside. So, when the market opens, where is that? Yeah. When the market opens, we'll read the market internals and what have you, but ultimately, the green boxes on the screen are some areas we're going to be looking to take today's market, most likely. We also have a gap down, so we might look at some Fibonacci gap stuff today as well. Where is the 68275 from? 50% retrace of yesterday's algorithm candle, which is on Thinkorswim. Yeah, so that's that. I guess we'll go into the volatility index. So let's bring that up. Volatility index here. What am I thinking? So again, same story as it's been for the past couple days. Volatility index is down, right? So it's below the 50 SMA, so the volatility is bearish. Just because it's bearish doesn't mean it can't bounce. But we know that the volatility or fear, no one's really been fearful, right? So this is fear in the market. Or sorry, no one's fearful in the market. My apologies. All right, so a lot of people aren't fearful right now because obviously the market's in a downtrend. But what we're starting to see is we are starting to see the volatility index bounce a little bit, right? So there's that. And believe me, this is all coming to a head or a story or some sort of conclusion, right? But this is what it takes to kind of walk through everything in the immediate and figure out your game plans. 5-day 15 is right there, give or take. 5-day 5 is right there. So the 5-minute trend on the volatility index is arguably turning positive. If the 5-minute trend on the volatility index ends up actually breaking and sustaining and continuing, that's where we're going to continue to look to take the market on the S&P 500 downwards towards, again, that 683 price, 683.25, 682.75, etc. Right? So for going into the open, for kind of continued immediate momentum down, we would need the volatility index to most likely keep going up, market to keep selling off. One of the ways that we could kind of look for that continuation slash comfortability, confidence of the market to continue down towards those downward targets we're talking about right now would be the volatility index maintaining over the 5-minute trend, creating a 5-minute intraday breakout, and then going higher. As a result, the intraday chart on the market will come down a little more, which is all happening already for the moment, but it just needs to sustain, really. All right, so there's that. So right now, it doesn't really make a lot of sense to be too long biased the market on your intraday kind of things, because the momentum on the VIX is kind of getting pressed up a little bit. So just be a little cautious, right? What else do we need to look at here? Let's just double check some of our 30-minute higher low volume weighted average price levels. Just make sure we're not overlooking some of those things. Let's take a look at our current buy signal volume weighted average price trend. A couple of those. And actually this is probably a better time. See, like what you're seeing me do right now is you're seeing me go through just a multitude of different setups and a multitude of different strategies in which any single one of these things will align and come to on any given day, any given morning. So you're basically just seeing me go through every single different strategy that the market can be using at any given point in time, and or how we're going to choose to move the markets to where we want to move them to. And so you're just kind of seeing me go through the toolbox right now, and every single one of these things helps kind of, for at least me, depict how we're going to sometimes paint the chart or paint the market, move the market to and from specific areas, right? So it's kind of like, the coach looking on the sideline at his team and going, okay, who am I going to pick right now to put in the game, right? Are we going to go with the running back or second string, first string? Who's got a broken leg? Who's even available? Who's not gassed out, right? Who are we putting in the game right now? So that's what we're looking for right now, is who is on deck this morning to be used as a tool, right? So anyways, there's that. So we're well above that current buy signal volume weighted average price. What about this guy? That one, we're still well above that guy. Now let's check the previous gap up trend. We're not even hitting that. And then we'll check this guy here, which we've already broken down. So arguably we'd be looking at that limit. That's debatable. Okay. So there's some volume weighted average price stuff that also lines up with those downside destinations we're talking about. So kind of double catalyst there. So yeah, for the moment today, we're just basically going to try to do our best to work the market down into 683.28 to 682.73, while at the same time looking for counter retraces on the market that can take us back as high as, for the moment here, even though in my heart I know that's not going to be the price. That's just where it's at now. All right, so we almost got that first target down on the market there. We're kind of talking about that 683.26. We just got a candle to drop out to the price of 683.33. So we've kind of missed it by about, what is that, 7 cents so far? Not bad, But anyway, so we're basically coming into that first downside destination target we're just discussing. Now ultimately it's kind of like, okay, if we start getting through that, then maybe we can slide it to the next one. So as you can kind of see, that's why the two boxes are mapped off where they're mapped off, because that's where we assume price wants to go. But anyways, so that's that. I speak a lot, I talk a lot, and there's so much to take in, Like I said, we're just going through the toolbox every day, just mapping off how we want to paint the market. In the chart, but like I was saying before, I know that the market is probably not well, these are VWAPs, right? So they're going to update. So this is another thing to take into account, is that these are these volume weighted average prices that are created in the pre-market session. Pre-market trading has significantly less volume than that of the regular trading hours. So the volume that comes into the market is significantly higher than that of the volume that's been participating pre-market. So pretty much all the time, you're going to see the volume weighted average price at the open move, like the VWAP from the pre-market that we're talking about on the upside here, this one here. That price point is going to move. And people might think of that like, it's a moving VWAP like that. I need something stationary. It's like, well, I mean, yeah, like that'd be great, but you have to really realize why it's moving, right? It's because the volume of the open and the volume during regular trading hours is so much higher than that of the volume from a pre-market trading session that, duh, it's going to move the volume weighted average price. Right, so it's not necessarily about having a VWAP that's stationary and a price point that's guaranteed. It's about there's an amount of volume and participation from the pre-market session that we're many times trying to screw over. In the regular trade, so it's like two different markets. So you have the pre-market and you have the regular trading hours market. The regular trading hours market has far more volume than that of the pre-market volume. Therefore, the volume that interacts at the market open is going to essentially affect the volume weighted average price, or a VWAP, of a pre-market session far quicker because the volume is just significantly greater, right? So it's less about a stationary target. It's more about screwing over volume, right? It's about screwing someone, right? And so, anyways, you'll see that VWAP move a little bit, but now you know exactly why it does, when it does, and we've gone through that whole spiel. So the whole four of you, yay. So that's basically what we're going to be looking for. We'll be looking for the market to sell off. And when I say looking for, this is for short-term market, movement, what you're going to be looking for. You'll be looking for, like we already said, market to sell down into this level, right? We'll be looking for the markets to work themselves back to this level. This level here can update all the way down to here. That's a moving target, right? So we'll get into it all. It'll be a good day, as it usually normally is. But as it sits right now, there is no reason that anyone should expect that the market is... the short-term trading environment might be a little bearish, but the market is not actually bearish. All right, the market is trend positive right now. It is not bearish, right? So do keep that in mind. That's weird. Why is that? Oh, I see, because this stupid thing always disconnected my gosh darn bank account. So annoying. Yeah, so just all of that. There was a penny stock TRIB today. That one moved pretty good. There's a couple other like small movers this morning. Nothing that just makes me all super giddy though. Oh my lord. Such a terrible platform. Yeah, so that's that. Like I said, we're long buys the stock market. I still have on long UPRO. It's somewhere in that scrolling ticker thing. So I'm just got a little bit long the market. It's nothing that's going to make me rich nor make me poor if I lose. I'm just invested in the market. Really, at the end of the day, we're in a buy move. We're in a buy signal. I've sold some along this entire move up. Now, pretty much the objective of any buy signal or any uptrending positive market trend is we're pretty much always looking for market to go up, market to pull back, market to get supported, and then go up again. And the objective of any downtrend or sell signal is the market to go down, make lower highs down. All right. So if we are to just kind of delete all the random craziness that I've gone over so far this morning, let's go back to a very simplistic approach on the market. It is market below SMA, bearish. Neutral or bearish. I like to say neutral bearish because I don't want people to think just because the market's below a specific SMA that they're supposed to just be railing in short orders and trying to sell the markets because it's bearish, right? So I say neutral to bearish in the sense that if you don't want to be a bearish participant, you can just be hands off waiting for the next long move, right? And there's nothing wrong with that. Because sometimes it is kind of challenging to go from bearish, then bullish, then bearish, then bullish. You can kind of ruin your psychology sometimes. So yeah, just, neutral to bearish or, long bias, if you will. So if we look at a very simplistic approach, and we always kind of do this every morning, look at, ready, market below SMA. What do? We go down, lower high down, lower high down, lower high down. All right, then we go into an uptrend, right? So up, pretty much flat, sideways, gap up and go, a little pullback go, a little pullback up, etc. So when we go and we start looking into today's session this morning, what are we seeing, right? We know that the market is positive because it's on the screen, bullish above, bearish below, right? So we know the market is positive, and we got pullback up, push up, pullback up, and then we got a pullback here, right? So regardless of how far the pullback goes, right, we're always looking and hoping, and when I say hoping because who wouldn't want the market to go up? Who wouldn't want the market to go up for as long as possible? If that were to happen, well, I guess that maybe is not a good thing, because that probably make the wealth inequality gap significantly higher than it already is. So anyone that's invested would hope that it goes up. Anyone who's not invested would hope that it doesn't go up. But then we're getting into the whole, anyways, you get the point, right? So in theory, maybe we don't really want the market to go straight up for forever, because then there we would just have a world of extreme have and have not, essentially. But I guess that's probably going to happen regardless anyway. So, so yeah, we're always looking for the higher low, higher high scenario in the market when we're above, right? Now, the other thing too is that when you're looking for the higher low, higher high scenario, you can still look for pullbacks, right? So, there's so many different rules. There's so much to the game, but and I try to do my best of coming on here each morning, mapping off essentially where the market's going to go to, and then why it's going there, all the different rules, all the different things that we can think about, how to keep your psychology in check, how to not be too biased one way or the other. Well, that's not entirely true, but so again, hope it makes sense, hope it helps. I'm not here to kind of give you a bunch of just random stuff that doesn't work. That's not my objective. Really, the objective, really my goal of every stream is that hopefully we map off where the market's going to go to, what direction it's in, why it's in it, when it's in it, all the things you can kind of watch for along the way. That's literally the objective of our stream. Or at least I try for it to be. So, like we said, we're kind of looking to take the market down into the green box on the downside, this red line, as low as this guy. These two green boxes right now on the screen are kind of the main area of focus of where the market, we are trying to drive price action and paint today's market, make the chart, if you will. So yeah, that's 909. There was some economic data that came out. I haven't even read it. I'm definitely not going to really read it. I haven't done that in, a couple of years, really. It's not true, but it is true. I can tell you right now, I don't look at the economic data when it comes out and go, oh, this number's that, so this. The market basically just sets up levels it wants to trade to, and then when economic data comes out, the market and algorithms and computers really just use that announcement to drive the price to where we always pretty much wanted it to go in the first place. So it's not like when data comes out, it's something that's like, oh, what? No, it's like, oh, sweet, we'll just use that to move the market where we already kind of thought it could go to, right? It's just the reason to move the market, right? So, when you first start out, you kind of think like data is like these big crazy things that drive crazy prices in the market, and because everyone is surprised or no, it's like, no, the market basically sets up a trail to follow many times, and the market is just going to use the data as the catalyst to move the market to expected or, expected levels, right? So that's all we're doing this morning, right? So for example, let's bring up Thinkorswim, right? So the levels that we keep referring to on the SPY, taking the market down into that green box, I'm going to show you here. So this is, so you see that right there, that candle, right? So that's a big algorithm candle. That is not retail. That is not, that's the way we see them as algorithm candles, if you will. So if you think about this huge candle, right? So this huge candle has never tested its golden pocket, right? So that's a golden pocket. So this market is really just selling off down to basically the golden pocket of that algorithm. And today we pretty much just used, arguably the economic data announcements. Like, what was the data today? Was it jobs? Hold on. I mean, I briefly looked earlier, like just for the purpose of making a YouTube algorithm friendly description for my video, because that's what people tend to use on the internet, because they think that economic data is key for everything. So the computers, so what was it today? So we had GDP, some industrial somethings. Yeah, so GDP maybe. Anyways, so whatever data came out this morning, right? The market has moved down, right? But look at this algorithm candle that was created yesterday, right? So levels that were created yesterday we're using today, and the data that came out today is being used to move the price towards levels that were created yesterday. So what? Yeah, you get the point. Right? So remember, the data is simply used as a catalyst to move the stock market to places that we've always already wanted them to go at some point or another. The market only goes up and it only goes down, and it goes up and down to specific levels that are created in the chart from either past price action, Fibonacci, volume, simple moving averages, and that's pretty much it. Literally, price goes up and it goes down, generally goes up and down to simple moving average levels, Fibonacci levels, volume weighted average price levels, or I think that's it, standard deviation levels. And I'd say that's pretty much it for the time being. Yeah. And so there you have it. So that's what you're seeing, that green box there on that screen. That's why a lot of people you hear say I was a day early when they guess. Yes, exactly. Yep. Yeah, exactly. Someone could be betting long coming into data, right? And then the market gets smoked down. It's just, that's what I mean is like, we really do just use data to move the markets to volume levels a lot of times, Fibonacci levels, things like that. So, it's like the saying, it's not random, but it is by design to a degree. It's somewhat random, but there is a little design to it, if you know what I mean. So just remember that. There's some randomness to it, but there's also a decent amount of design being built into the charts, All right, so we'll continue on. That's enough spieling on that. Now, as far as hold on one second, I gotta double check this thing I was doing. Oh, don't want you to see that. That's some bank information. I hate this platform. It's so annoying. This platform I use, it just keeps disconnecting my bank card, and I just don't know why. I connect it all the time. It's like, yeah, your bank's connected, and then the next day it's like, your bank's not connected. It's like, that's great. Can you guys get your ish together? So All right, moving over to Bitcoin. There is really nothing all that exciting to say about Bitcoin. I wish I had more exciting news for you, but ultimately, we're just in a bear market. We'll be in a bear market. I don't want to give away too much of the strategy because my Bitcoin strategies have been way too good. So there's some things that kind of, kind of just meander around. But yeah, we're going to be in a Bitcoin bear market pretty much until we reverse the bearish trend, if you will. So we do have some targets right now to about 105,000 to 100,000 on Bitcoin. So that's currently our counter trend target level. Now, remember, those are volume weighted average prices. They move. That's what they're priced at today. So when I speak in targets, I speak about where the trends are currently at. Wherever they're at tomorrow is where the target is. Where it's at in 2 weeks, that's where the target is, right? So it's not like I'm sitting here in front of you today going, oh, 105 grand is a target on Bitcoin. Let's just buy it and hopefully it goes. No, that is an evolving target. The market will go to it. It's not going to go to it. That target will not be met. It will be met. Fact. It's just whether or not it's going to be 105K or whether or not it's going to be 100 or whether or not it might be 98,000, right? How long the market takes to get to that said volume weighted average price is the unknown. But what is known is it will do it, all right? Gosh, so lame. All right, so yeah, hopefully today's a good day. Hopefully, yeah, hopefully all that good jam. Of course, just taking absolutely forever to connect this darn bank account. Just a crappy service. Dang, we've already been live for 40 minutes. Who would have thought? All right, so yeah, hopefully something cool happens today, I guess. I don't really know what else to say. Everything's already mapped off. I mean, green boxes, green boxes. That is literally what is going to happen. Yeah, I mean, I wish it was going to be a little bit more of an exciting day. I don't really, I mean, it's just not. You know, we've already started the buy signal. Buy signal is well underway, so it's more of a, you know, you basically are just dip back to long, hopefully. But as I always say, the risk is always elevated when you're not buying at the break of the 50 SMA anymore. So, yeah. Let's see, silver up to 63 today, or 64. Well, SLV, for that matter. So let's see. You know, I don't know how many of you guys love it when my computer does that. So lame. Whoever created that feature should probably never work for a computer company ever again. Yeah, so as far as SLV goes, you know, we've been discussing it, and you guys obviously know we've been talking about this getting up into the +2 to arguably +3, maybe even +4 standard deviation. So I guess you could say like one of the first targets up here would be as it relates to standard deviation, about 64.37, along with 72.50, and then along with 81 pretty much. Those are the dailies, and if we go to the weeklies are pretty much, you know, a little bit different, but anyways, I just mapped off all those lines for no point because there's already a bunch of lines on the chart. I don't know why I do that, but anyways. Yeah, so I would say the best case scenario right now for silver is somehow it gets super euphoric and jumps all the way into about 84 right now, which 84 we end up being like 90, 100 sooner than later. Yeah, so I mean, for me, I'm like, I wouldn't be looking for silver to go over 100. If it does, great, whatever. I still own silver and gold. Like I said, I sold most of my physical silver, or no, not well, I guess most. I hold a little bit of physical now. But I got rid of most of my physical gold and silver some weeks back. Now I just hold my paper ETF physical, or paper ETF digital silver and gold. So yeah, as we keep moving silver up into the upper distributions, standard deviation levels, I'll look at deleveraging some more of those positions. I just think it's time. What would really suck is if we went on some like multi-decade run and I sold it all here, but is what it is. Just you invest to make money, and I've made a pretty darn good return on my silver and gold over the past 5-6 years. So it's kind of one of those things where it's like, well, if you're not going to sell it when it goes up, I don't really know what else you're supposed to do with it. Hold it for forever, right? I mean, maybe. So, I'm going to live with the decision either way. So, anyways, that's what's up with gold and silver. Hopefully it reaches up. Well, hopefully silver reaches into the, 75s, hell, 80s. I hope it goes to 100. That would be sick. But yeah, won't get too optimistic there. Oh, man. Yeah, so, maybe I should be like a little bit more clear on like what we're looking for, but we'll just write up here, green boxes on screen are always expected targets for the day. Ish. Again, I still got a small long on the market, nothing to really write home about. I took some profit, obviously, along the way up. Now I'd be looking for resets, dips to buy back into while we're still in the buy signal. Yeah, that's pretty much it for that. Hopefully silver goes wicked. I would love it. 63.70 today. All right, market is squeezing back up. We've pretty much hit our counter trend target. All right, so job well done, everyone. We have taken the market from to the box on the downside, now back up to the box on the upside. And that's effectively how we have painted today's stock market. All right, so all of our current early morning trading, short-term analysis, to a degree, is completed. I know, crazy. All done. Now, as we said before, the market is still what? It's still a long bias market. It's still just a bullish market. Why? Because the market is above the 50 SMA. All of that. Wow, look at this. So it's so bullish. So bullish. Alrighty, so that's that. Now what we're going to do is we're going to start going into some of the 1 minute stuff now because this move is so explosive up. We're going to anchor a 1 minute volume weighted average price to the bottom there. And that's pretty much going to be our new counter. Well, yeah, basically our new pullback slash 1 minute support, higher low, hopeful trend, if you will. So again, we'll pretty much be looking for the market to pull back down into that 1 minute volume weighted average price and or that 1 minute volume weighted average price catch up to the price and then hopefully hold a higher low and market at least continues up for some little bit. So we've pretty much completed the pullback to that 1 minute volume weighted average price as we pretty much said was probably going to happen. So that's complete. Now it's just a matter of whether or not the 1 minute chart is strong enough to basically hold that, or if, you know, because this is what's going to happen. I mean, it's either going to hold up or something like that. So it's kind of up to the market to decide whether or not it, you know, it basically wants to hold its 1 minute volume weighted average price, move to the upside, or if it wants to basically shake out everyone that was buying into that 1 minute, you know, explosive move today. Thumbs up, guys. Happy holiday weekend. I know it probably gets a little old, you know, just coming to the stream, watching the market just kind of, you know, go up and down. But that's what it does. It just goes up and down, you know what I mean? It go uppeth, then downeth, then back to uppeth, then back to downeth. That could be interesting, actually. Hold on, guys. I have a phone call coming in here. Maybe. Where'd it go? That's so weird. All right, we are back. We are back. Yeah, again, just overall, you're just still long biased the stock market. There's not a whole lot to say other than the market's in a buy signal. It's going to be in a buy signal until the S&P 500 breaks down 50 SMA or until the volatility indexes or fear rises in the market in a substantial enough way to make us think the market's actually bearish. Otherwise, everything is just a pullback back to hopefully find some support and continue moving the markets up. And that could last for as long as the market wants and last for as little as the market wants. So whenever the market's finally ready to give up, it'll eventually give up. But again, that's only going to happen once fear breaks out or the trend of the market actually changes. So just keep that in mind. Three people on stream today. We are absolutely crushing it. I'm sure YouTube is just still having a tough time figuring out who the appropriate audience is for our YouTube streams, since the title of our YouTube channel doesn't already give it away. You know what I mean? Well, yeah. So, cheers, guys. I know there's not a whole lot of, I mean, it's funny because I look at the market these days and I'm just like, what else is there to say? I mean, it's in a buy signal. It's going to pull back to probably here, pulls back to there. Then it can go up to here. It goes to there. Then it's going to pull back to here. And then, it's like, I don't really know what else to say. Don't really need to talk about the economic data to figure out where the price of the market. You see, that's the other thing too. Is like we didn't even look and read the economic data, and somehow we still figured out how and where the market wanted to move to. At the end of the day, I mean, it can only go up and down, right? So you just take a couple price points and pop it on the chart, and it's most likely gonna hit. Hey, the market's going up. Who would have thought? That's wild. That's just wild. Today is Tuesday. Shoot. I was supposed to buy the stock market yesterday in my M1 account. Kind of screwed that up. Do I ever trade options? Not really. I used to trade options a little more, but more recently I've just been doing more of like portfolio management lately. I've kind of been enjoying that portfolio management along with trading some penny stocks and leveraged ETFs. Currently, that's where most of my money gets used when it comes to investing. But I've traded options, futures, penny stocks. I mean, pretty much everything. But again, at the end of the day, any instrument you trade all has to do with you being correct on the direction, at the end of the day. So regardless of what you try to trade, as long as you have a pretty good idea of direction, you can generally do okay. I just as I've gotten older, don't like the riskier instruments. I just don't deal with them as good as I used to as I've gotten a little older. But yeah, at the end of the day, if you want, as the market goes over the 50 SMA, you could be long call options, you could be selling puts, you could do, that's pretty much it. If the market's in a long bias trend, you either want to be just straight directionally long bias options, or you'd want to be, selling. You'd want to be selling puts, right? So there's a couple options you could get involved, right? It'd either be selling premium or buying premium, right? So if you're going to buy the premium, then you need the market to have a good move. So, it's kind of one of those things, however you want to do it. But those would be the two ways to involve yourself on a buyish move like we have now, either buying premium or selling it, which I guess would be the case in every single scenario. But like right now, you'd be better off being in long calls and selling puts, right? If we were in a sell move, you'd be better off buying puts or selling calls, right? And so that's kind of the tricky thing is I would say most people don't truly understand the market maker structure of a market and when we're going to move stuff up or down, at least in the short term. So they'll find themselves buying calls in a bearish market, and then it goes down, their premium gets crushed, they stopped out, then 3 days later, this is a perfect example, right? Look at this market. Right, the market, it took the market from there to there. That was, 6 days, 6 to 7 days down, right? And then it took only, basically from the all-time high. Let's go to the all-time high. So like from the all-time high to like this low was 6 days, maybe 7, right? So it took 7 days to go down there. And then it only took from the buy signal, 5 days. Well, it depends on how you look at it. If you go from absolute low, it'd be 5 days. If you go from the moment it actually turned into the buy signal, like the moment it actually turned into a buy signal, it basically took 2 trading days for the market to get back all the way up, right? So in terms of options, right, someone could have bought on this dip thinking that was good, goes up, then goes down, they stop out, and then 2 days later goes into a buy signal and up, right? So, it's just kind of one of those things where the market can flip structure so quickly that if you're not really on the right side of the market, you could get crushed with options premium in that regard. So yeah, that's I guess what I would say to that. Yeah. But yes, I've traded S&P 500 options, SPY options, SPX options, QQQ options, etc. Futures, pretty much a little bit of everything. Gold, silver, real estate. Market's doing well. Market's going up as the market should. The market should go up. Again, we're in the Santa Claus rally magoo. We're in the holiday season. We're in the season of giving. And the market is in a buy signal. There is no fear in the market currently, so you're not really supposed to be fearful selling the market. We can look for pullbacks, but those pullbacks in theory are dip buys because the market hasn't yet broken out fear, hasn't broken out volatility, and the markets are not in a downtrend. So in theory, the market should go up, right? Because why wouldn't it not go up, right? Yeah. Yay! Market going up. Sick. By the way, we're going to be hitting, if we haven't already, the 161 target of yesterday's gap up. So we have completed that. So that's good. Let's see what the Fibonacci of the current buy signal would be. So if we look at the fib for the current buy signal, that would say we're going to there. Or there's another one we would look at. If we look at the fib from here to, from here to here. If we, so yeah, these would be our kind of our 161 targets of the current swing buy signal operation. So in terms of the swing long 161 destinations, we're pretty much getting into those right now. So I'm actually going to lock a little bit more here as we move up into these 161 targets, because to me that's completing or coming into a completion zone of our swing. Not that the market won't go higher, but it's in terms of Fibonacci, right? We have completed the 161 of what I would call a the current buy signal Fibonacci, whatever, that's how I read that. So we've just hit the 161 there. And now I'm still holding some long because the market is in a buy signal. The market is trending up. The market is long bias. Just because we've come into some levels that I've used and do use as targetable areas, the targetable areas don't necessarily dictate that the long bias move is over, going to top out or be done. So I've just sold a little bit, locking into areas that could top the market, could slow it down, could do whatever, but the market's still bullish. It's still long bias, so I'm still holding some of that long position currently. Let's go look at our market internals. So on the day, the market internals for the hold up. Market internals for the S&P 500 are actually bearish. Market internals from the New York Stock Exchange are actually bearish. The market internals for the Magnificent Seven are bullish, and market is just screaming up. So that's kind of interesting. Basically just means we're just manipulating the stock market higher today off the back of a handful of stocks. Most of the market is not running bullishly today, so a lot of this move, if you ask me, is kind of, whether you want to call it low volume holiday week manipulation, sure. If you want to call it Magnificent Seven manipulation, sure. But basically, I don't see, this is not what we would call a broad market bullish move. There's not an extreme amount of market participation going on with this long bias move. New York Stock Exchange equities are being sold off. The S&P 500 issues are being sold off. And the only thing that's currently going up are just a handful of Magnificent Seven stocks. So I would read this as a somewhat manipulated, forced long operation, as opposed to a true, legitimate, broad market strength move. But then again, we are in a buy signal. The market is bullish, so the market going up, theoretically, it should be happening. Whether or not it's a forced manipulation grind, not a lot of market regardless, trend is positive. This is just how it goes. So, obviously, with the market being up today, well, just in general, we already know that the news of the market's positive. We've known this. We know that the news for the market will not shift bearish until the volatility index breaks out, or until the stock market goes into a bearish selling operation. That's generally how it works. Unless there was a really big bearish pullback day, then they would start talking about it. But yeah, there's really no reason for the market and the news cycle right now to be bearish. And the reason I say that is because bearish movement only comes when the market is bearish. It's not bearish. So if there's no bearish market movement, then the news articles aren't going to be bearish. Like, yeah, I don't know. They'll probably, so today with, it's debatable. It's a little early, but, But yeah, most of the news is probably bullish. There's probably some random dude out there that posted some bearish news article about the jobs report or whatever that was, that the GDP report today. Yeah, whatever economic data came out that first initially dropped the market, someone probably wrote an article about that saying like stocks were giving back gains, but now he also looks kind of like an idiot because the market's screaming back up. So I'm assuming, maybe someone wrote a news article like that today. Yep, there it is. Never doubt the mainstream media to always be wrong. Stock market today, Dow and S&P 500 futures slip after US GDP unexpectedly accelerates. Oh, did the market slip? Or do you mean the market's just absolutely booming? Whoever wrote that article at Yahoo Finance probably should be looking for a new job. See right here. So you have the two people at CNBC they should just stop writing articles. Look at stocks fall after strong GDP report. Do stocks fall? Are you sure? Or do you mean the market just rips everyone's face in half? Straight to the upside. Straight moonshot. Stock market today. Dow and S&P 500 NASDAQ futures slip after US GDP unexpectedly accelerates. Are you sure they're slipping, bud? Maybe you're slipping. Maybe you should get your brain checked out. Probably early onset Alzheimer's, if you ask me. Maybe not the best thing to joke about, but you know, we're working on myself too. So, but yeah, I would. Who wrote that? Did they even put his name? Sean Conlon and Pia Singh. Well, you guys, let's see. Pia Singh covers markets and investing trends for CNBC.com and CNC Bureau. She previously reported for the Wall Street Journal. Might have to reach out to good old Pia and get her on board with the buy and sell operations of the market. CNBC associate reporter. I should become a CNBC associate reporter. I would do a better job. Alrighty. Ooh, look at the old rejection. Not really, I mean, but again, we've come up into our 161 destinations of our swing long operation for Santa Claus Rally. Obviously, we hope it goes higher, but ultimately, you know, that's already a great job well done. I'm hoping the market goes higher, obviously. That would be great. My 401ks will love me. You know, all that good jam. Shoot, I was supposed to buy the market today, though, and I kind of like, well, I was actually supposed to buy the market yesterday. I keep forgetting that on my freaking M1 account. If I'm really following the freaking strategy I'm supposed to be doing for you guys, it's supposed to be buying on Mondays, and I forgot to buy yesterday. Now today's Tuesday, the market's exploded. That's the problem with my brain. I mean, I could, but I already know we're extended in the current buy signal. It'll probably be better if I just waited till the next sell signal, but then you miss the game. I hate investing sometimes. And I don't think there's a way to... maybe there is a way to automatically buy on Mondays with M1. I thought I looked into that, but maybe I didn't. So maybe I gotta double check that. Again, guys, it's just a swing along. It's just swing me along. We'll do a little small little whatever update here. I need to reconnect my bank to this. This thing's getting all jacked up. I don't know why. Well, this never works, but anyways, this should be back over 900 something because my bank and blah blah blah. But we'll get that fixed probably by next week. But yeah, real estate portfolio is pretty much still the same. This thing doesn't really change too much. It usually changes month over month. So as we get into January, there'll probably be a little bit of an update to the real estate portfolio for you guys. But yeah, that's that. So yeah, like I said, we got to get through this big remodel phase on a couple properties, and then hopefully these numbers will start looking a little bit more favorable. You can say we've been dealing with a little short-term pain, if you will. So it'll be nice to basically not be spending, on average $4,000 a month right now. That'd be great. We would like that. So that's that. Yeah, let's see how the M1's doing. I know we're going to be positive now because I bought the dippy. Where did it go? Did I send it back to my account? That's so weird. Either way, I'm just going to be buying. Smart money portfolio. Now that wouldn't be smart, would it? Maybe not. Yeah, we'll wait on that one. Alrighty, we'll do a little purchase here on, well, yeah, we're going to be adding some to the dollar cost average simple DCA SPY portfolio today. Again, we'll be building this one with you on stream as the days, weeks, and years go on. So cheers, you can follow along or not follow along, but this is merely meant to be a case study for pretty much you and the future generation. So essentially, this account is supposed to follow 100% the idea of dollar cost averaging the S&P 500, and hopefully it makes a gain over a long term. And then basically one day when I die, everyone can use that as a case study if they will. Yeah. So cheers to that. So far, it looks like there are market makers listening to our live stream because all of a sudden the market is topped out perfectly at the 161 target of our swing long operation, as we mentioned. Maybe it was lucky, I don't know, but I think the market makers got to chill out on our channel because you guys keep moving the market so aggressively at these said levels. You're going to make me look like a gosh darn wizard. Stop it. Do 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 do. Okay. Yeah, I don't know what else to say. We've, in a nutshell, have effectively predicted the largest globally traded stock market in the world once again. So, what more are we supposed to do? You know what I mean? Said it was bullish, said it would probably go up in general, gave the pullback targets, gave long targets, gave another pullback target, gave another long target. So we've essentially mapped off 1, 2, 3, wait, yeah, 1, 2, 3, and 4 different desirable targets for the day, all of which have hit pretty much to the penny. I don't know how much better we're supposed to be, but I feel like that's pretty good. I feel like we're doing an okay job at least. So, yeah. What else is there in the world to do? Oh no, why is the market pulling back, guys? Oh, maybe because literally the only thing driving up the price of the market today were a handful of stocks. Everything else is dropping out. So once the handful of stocks were no longer going up, let me bring up the volatility index too, because obviously that's going to be important. Here we go, y'all. Here we go, y'all. Here we go. Here we go. Here we go. Here we go. So let's just take a look at the 5-minute chart. Literally, the 5-minute chart's not even positive for the market on the VIX. So yes, if you were to look at the SPY right now, you see it's going down. It's going down relatively aggressive in terms of the way that the candle and the patterning looks like it's kind of just down. But the reality is, no one's even fearful of that. You know what I mean? This just said, like, no one's fearful of that drop. That drop, it may look scary, but no one's fearful. If in the event the VIX was over at least the 15-minute chart, like up here, we might consider the market starting to get maybe slightly fearful, but nah. Let's check out VVIX. Is anybody even hedging downside risk? A little bit, actually. That's okay. So that kind of falls more in line with the long being forced up, right? So there's a little bit of slight hedging over the 5-minute. I wouldn't really consider that anything too much to write home about. Interesting. What was I gonna say? Oh, VVIX. Yeah, bring this bad boy up here. 10-day 30, 10-day 30, 10-day 10-day. Yeah, VVIX isn't really, it's just, we're just pulling the market back in a buy signal currently, right? And yeah, we need the volatility index to really show fear for us here to be really scared of the market or anything like that. Alrighty, so like we already said, all the same stuff. There's really not a whole lot to do here, guys. I wish there was more I could do for you, but well, actually I don't. I think we've already done a good amount. We've done a great amount. Yeah. So cheers to that. Let's go over here to the SPY. We're going to delete this real quick. Bing, bing, boom. So right now the market's going to counter pop. Oh, man, come on. Would you work? There we go. Yeah, right now you could throw some VWAPs. So like basically right now with the way the market's moving, you should throw some VWAPs on the top of these moves. That way you can pretty much just know where the market's going to go. That's really it to a degree. So we start anchoring here. That would basically mean markets have counter trend targets to like right here, arguably a little higher than that, which would be there. So like right now that's kind of like your best case scenario 1 minute counter trend bounce. So the market is set up like this, basically pop to here, find resistance. If not, then it breaks here and we look up there, right? So that would be your 1 minute lower high micro chart structure. That's just how it's set up. It just is what it is. And and you see how I've drawn this little, you know, the reality is it's already pretty much done that, you know. You've almost, like, you can already see it right there. These candles, the tops of these wicks have almost hit that trend. So essentially this would be market down, pop into 1 minute micro red candle down. But ultimately, just in general, this would be your zone that has to remain as resistance on the 1 minute chart to keep the trend down. Otherwise, then you would start to reset some volume and then you'd pop it up to that next trend there. But for the time being, you should pretty much just expect you're in a 1 minute lower low, lower high scenario until you start taking out some of the 1 minute chart structure. Oh, let me just redo this. All right, so there's the counter trend, pop, target complete. So that would be like a micro scalping strategy we just went over right there. So now this is where the market has to decide. Does it want to hold below 1 minute volume weighted average price trend, create a 1 minute lower high, and continue what? Continue this kind of trend? Or do we break over and reset the next VWAP above? That's pretty much what's going to happen. So now this is how I would read the 1 minute chart. So that's how that's set up, these two green boxes. Just remember, anytime we put a green box in the chart, that just pretty much means that's most likely where the market has the opportunity to trade to. That's how I think. I think in terms of where the market wants to go. So, you know. And then, as we said before, when we kind of started this stream this morning, the market, generally speaking, trade when we paint the chart, when we make, and essentially when we make the market, if you will, right? When we make up the way the chart moves and where it moves to, right? Markets generally move to and from simple moving averages, volume weighted average prices, Fibonacci levels. Am I forgetting anything else there? Standard deviation as well. So, at least for me, there's a couple things we use to determine where price wants to go, right? We're not looking at relative strength index. We're not looking at MACD, right? We're not looking at oscillation metrics to determine price point, right? Or where things want to go. That would be momentum, right? That's strength, right? Does something have strength in one direction or another? But that has nothing to do with pricing of a market, right? Volume weighted average prices, Fibonacci. Some could talk about fair value gaps or ICT concepts. That's another kind of pricing thing, if you will. Not that I specifically use it, but anyways. So price many times is determined, call it ICT or fair value gaps, if you will, Fibonacci, volume weighted average price. Anything that has to do with like price, that's how we determine where price is going to go. And then oscillation is how you determine oscillation is how you use that to determine where you want the price to go and if it has momentum for the prices you've picked, if you will. So, nonetheless, that's pretty much that. We could take a VWAP and we could anchor the high of this red candle, and that's going to become our new 1 minute right there. So I know it's kind of late to that, but you see how we take the 1 minute volume weighted average price of that previous red candle, and that pretty much tells us the market's going to go to right about there. That's how we pop that 1 minute candle there. Again, so 1 minute VWAP to kind of give us an idea where the candle would like to pop up to there. New 1 minute chart is set up on screen to a degree. That's pretty much how we would view this right there. All right, next 1 minute target's been completed. Hit. How many targets is that? How many times did we predict the price action of the market today for you guys before it happened? That's just crazy, right? Is that how it's supposed to be? Like, is that how everyone else is? Like, is that like normally how the YouTube streams are on the internet? Again, I don't watch other YouTube streams, so you guys just let me know if that's generally what other YouTube streams do. Kind of put the little cute boxes on the screen and basically say that's where the market's gonna go. You let me know. Do you enjoy that? Do you guys like that? Is that not something you want to see? Does that not help? Or does it help? I don't know. Might be needing to do a 5 minute now. Yeah, we might be looking up to a 5 minute now. Basically, if no resistance is found at the 1 minute, then we should be going up towards the 5 minute, which we're pretty much already there. It would be, sorry, I'm getting all kind of messed up here. It'd be here to there. Yeah. Oh, snap. I actually deleted those ones. I didn't mean to do that. No feedback on the 1 minute volume weighted average price strategies, helping you guys predict the micro movement of the chart. No one likes that. Okay, maybe I'll have to not do that in the future. All right, 5 minute VWAP target hit there on the upside. Job well done, team. Another prediction in the market come to corrective. Yeah, Bitcoin not really doing a whole lot. Like we said, market is mapped off, ladies and gentlemen. Now we just got to pretty much wait until our next swing trading opportunity, next buy point of the market. which could be weeks from now. Probably gonna have to find something else to do on stream, or else, people are just gonna get so bored. Thank you to the beautiful people tuning in today. Love you. Appreciate you guys. Funny. Interesting. Again, just remember, guys, there's no fear in the stock market right now. No one is really scared unless the market just randomly drops out so big that it causes the VIX to actually break out. Just remember that again, until we have a breakout on the volatility index, it's still kind of a dip long market, regardless of the pullbacks that you see take place in front of your face. Pullbacks, red movement on the market, are simply just pullbacks until the volatility index confirms fear. Then the pullbacks can turn into two-step magoos to the downside, or two-leg systems to the downside. So essentially, we're just still in a dip buy / long bias market until pretty much I or the system says otherwise. When I say I, it's because I just listen to the system. So pretty much, the market's going to be the market will remain kind of on the long side until the system says that the market is transitioning bearish, at which point I would then tell you that the system is transitioning bearish. Definitely have not mentioned that stock. Yeah, I don't really do a whole lot of jumping around. Well, it's not entirely true, but F-Jet, no idea. Looks like is it a recent IPO? That's what it looks like. I have no idea what this is. Yeah, I mean, the realize I have no clue what the stock is, who the company is, what it is. It's IPO. So, yep, literally no clue. It's not necessarily my area of expertise, understanding IPOs, looking through the financials of IPOs, or anything really. I just pretty much know how to map off the price action of the largest globally traded ETF and predict the price of that pretty well. That's pretty much what I can do. And arguably keep everybody on the right side of the largest globally traded financial market. It's pretty much where my expertise is at, not necessarily looking at, IPOs and knowing exactly, how to best manage those. It actually does seem kind of interesting from a quick read. Let's see. Hold on. Now, you've piqued my interest a bit, if you will. Let's see. FJet. Starfighter Space Inc. is an aerospace company focused on using supersonic aircraft for commercial and space-related services. Their business includes, but is not limited to, baking cookies, taking your dogs on walks, arts and crafts. Nah, I'm just kidding. So yeah, their space-related services operating a fleet of supersonic Lockheed F-104 starfighter jets, one of the few commercial companies in the world flying at sustained Mach 2 speeds, developing air launch capabilities called Star Launch programs using a modified aircraft to carry payloads like small satellites to high altitude before releasing them to suborbital access or launch. Providing aerospace services such as pilot and astronaut training, hypersonic test support, research and development, and in-flight aerospace testing services, R&D and scientific work related to advanced flight, hypersonic testing, and other aviation industry projects. Background: the company completed an IPO in late 2025 and to raise capital to scale operations, especially in aerospace test services and launch development. Starfighter Space sits in the aerospace and space technology sector with its narrative tied to commercial space launches and advanced aviation operations, part of the broader growing space economy that has attracted retail and speculative investor attention. So, from my little pea brain, the research, it would sound like, to me, the coolest thing is the fact they might be able to launch satellites into orbit through non-traditional means, or the non-standard, which has been launching rockets to release satellites into orbit, but now they will maybe keep a fleet of supersonic something launch pad and semi-orbit that they can launch satellites from. That's kind of what I've gathered is looks like they're creating some sort of infrastructure to better release satellites into orbit, as opposed to our traditional means of doing it, which is by launching a rocket, which is by no means the most efficient way of doing things, as we all know. Again, guys, just a reminder, the stock market is currently in a buying algorithm that's positive. Just remember that. You guys already know. I mean, for the most of you, you guys know that that's what's going on. And you know that world will change, narrative will change, bias when it makes sense to. Right now, it doesn't really make sense to. It makes sense to be more of a long bias market participant. Also, I did add some to our simple dollar cost average strategy portfolio on M1 Finance today. So we did buy a little bit more into that portfolio. Really nothing to write home about. Those are going to take some time to build up to a meaningful dollar value amount. But, you know, doesn't really matter. But yeah, so we did do that. Debatably, I don't know if I would like to wait till the next sell signal to add up into the smart portfolio. I think the stock market is back trading above the mean, which means, I mean, it's not bad. Let me see. Let's see where we're at with the long-term mean right now. Yeah, so currently, if you look at the market, Come on, computer. Come on, you can do it. I know you can do it, little guy. There you go. Yeah, so right now we're trading at the long-term weekly mean. So it's not like the market's really overbought. It's not really like the market is oversold. We would just kind of see this as kind of like, meh, fair value. You know, which, honestly, it's not bad, I guess. Let me check a couple other things. VXUS. Oh, geez. Actually, VXUS is below the long-term mean, so maybe I should actually... Well, I could allocate more capital there. That might make more sense. Probably does. VGIT on sale. Not bad. Yeah, actually, I think I might. I'm gonna add up on those ones. Okay. makes sense. Wait a second. Where is that? Where is it at? All right. Yeah, busy morning here. I know, super exciting. I know it's a super exciting stream. All we've said is buy along the market. Make sure you stay along the market for the most part, and market is going up. So I guess we can't really complain. That's a job well done, folks. Job well done. Is there any penny stocks that's actually doing anything halfway decent these days? Actually, that's kind of interesting. Maybe. And I swear, I really just have not. I mean, then again, it's not like I'm waking up super early or trying to catch trades on penny stocks right now, but just from being up and just being in front of the computer actively working, I mean, literally, I just do. The setups are just so trash these days. And the market is pumping. The market is pumping up, guys. Oh boy. right, we'll do a little bit of our longer term portfolio update here. It is doing pretty good. All right. All right, so there's the long-term portfolio up here, trailing 1 year here. Sorry, my cursor, where to go? There it is. So, yeah, not bad. Nice little 31% gain. This 401k, this actually, I used to have a non-qualified account, so I used to have a oh, that's terrible. That's just not working. I thought it would, but either way. So I used to have a non-qualified account in here. So this account used to be bigger than at one point I took some of the money out of the I basically closed out the non-qualified, used that to buy some real estate and invest in real estate. So this used to be arguably a much bigger account, but then I thought it'd make sense for me to take some money out of that, go into some real estates, and I did that, and so on and so forth. But nonetheless, 31% overall for the year here. 31 on this 401k, 32 on that 401k. As I said, we have a lot of money here that's been invested in metals. A decent amount of money here in short-term treasury bonds, things like that, bonds. Then obviously a mix of large cap blend, large cap, cash, etc. And like I said, I am starting to deleverage some silver and gold here and rebalance this portfolio a little bit into some equities, things like that, a little defensive. But anyway, so arguably this has been a relatively defensive portfolio for the past year, and it's still cranked out a 31% return, but that's arguably because gold and silver did so well. But I've been in a relatively defensive position, less equity driven, but portfolio still did really well, so I'm pretty happy about that. All right, let's see here. What is that? Lame. That's right. Hold on 1 second, guys. Got a phone call coming in. Alrighty, I am back. Lit. Alrighty, sorry about that. Yeah, we'll bring this up here. Here's a little small Roth IRA trading account, like I say, that I trade behind the scenes with you guys. I don't really think there's any damaging information there, so I don't really care. But anyways, again, decent here return for the year on this account with you. Again, that's pretty much what I spent my time on, just dicking around behind the scenes trading on the stream with you guys. So that one's up about 46%. This is a cash account. There is no margin. There's no nothing. Just straight up cash, can't leverage up, can't do anything like that. So 46%, pretty happy with that overall. I think that returns, it should be more like 35s or something like that. Somehow this isn't calculated totally correct. But yeah, so, it's a Roth IRA. It was the first time I've been able to use a Roth IRA for trading in years because of income reasons. So it's been kind of fun being able to use a Roth IRA in a way. So there's that. So that's all good. So generally for the year, most things are doing pretty well, except for real estate, which is really still doing fine. It's just kind of this drag period I'm in. Not really fine. I mean, down 16% trailing year over year is not good. But it won't take long for that to get back into balance once we're kind of done just blowing through a bunch of stuff. Yeah, so overall, most portfolios have really done exceptionally well. Cryptocurrency did very well. Well, aside from these past couple months, right? But yeah, so most things I would say overall doing just fine, doing just dandy. Man, look at that freaking look at that market. That's a funny looking pattern today. Just straight up, straight down, back straight up. Look at that. Literally just, right? Just big old ripper. What time is it? 10:55. All right, guys, gonna get ready to run. I got a meeting to hop into, but it's been fun hanging out with you today and predicting the world's largest globally traded ETF as we normally do almost every single day. So cheers, have a good one, and I'll catch you on the next one.